Hello and welcome to this August 10th episode of the GoNoGo Show here on Stock Charts TV. My name is Tyler Wood. I'm a CMT charter holder, and today, as always, I am joined by Alex Cole, the chief of charts over here at GoNoGo. How you doing, my friend?
Very, very well, thanks.
This is the dog days of summer. This is the time when we can all get up, take that seventh inning stretch, maybe reconnect with our family and friends. And markets are certainly behaving as such. Seasonality is not our area of expertise, but a lot of our colleagues in the industry who really focus in that realm have talked a lot about what to expect in this short-term pullback here for the equities markets. But as we do at GoNoGo Charts, let's start with our cross-asset heat map for that top-level perspective.
Yeah, not too much change. We see that we've been seeing consecutive go bars for the S&P. That's that top panel. Remember, asset class heat map, and we haven't dropped too much further this week. We seem to have stabilized a little bit, but certainly we haven't regained strength. We don't see any bright blue bars just yet. Treasury bond prices, of course, in trend. That's weakened a little bit this week. We see some pink bars now at the end of this map on the right side. Treasury, that was Treasury bond prices. Commodity panel, still in their go trend and actually strengthened over the last couple of days. And the dollar holding on to a go trend, even though painting weaker aqua bars. So similar sort of picture as we were seeing last week.
Absolutely. Let's turn to some of those macro influences on our equity markets. Let's start with a chart of the TNX, 10-year Treasury yields. And remember, yields are moving inverse to bonds, so that no-go trend in the TLT bond selling correlates to rising yields or rates. Yep. And we certainly have been in a go trend here for several weeks.
Yeah, this is the daily chart. You can see we've been making a series of higher highs and higher lows for the past couple of months. We recently made a new high on strong blue bars. We of course see the counter correction arrows at peaks. That tells us that be a little trend exhaustion. We've pulled back, as you can see here, following that signal, and then we're painting weaker aqua bars. So trend in place. This may well be another higher low. We're going to watch the oscillator, of course, to see if it can use to find support at the zero line, which it should if this go trend is to remain healthy. So we're going to look to see if the oscillator rallies our line into positive territory, and that lead price to move higher and try to make a new higher high.
Absolutely. The two really key factors that a lot of analysts and portfolio managers look to in terms of the risk on versus risk off characteristics are going to be these yields and the US dollar. And we've seen some strength in the US dollar recently. Let's turn over to a chart of UUP, which is an ETF proxy for the dollar index. We've seen that strong rally off the July lows, but coming back towards a pretty key resistance area.
Yeah, absolutely. And if I pull this a little bit, you'll see that we've beat this channel at the lows, bouncing off these lows towards the resistance levels just about here. And we're in that sort of again. We're going to be very curious to see if this go trend can really take some, or if it's going to a little bit meet with resistance as it has done a couple of times already, and then roll over. We do see momentum is in positive territory, of course, with above the zero line, so that confirms this new go trend at the moment. But as the resistance coming up quite quickly here, so we'll see what happens to the dollar over the next week or so.
Absolutely. And for those of you who are new to GoNoGo Charts, all we're doing is taking those tried and true technical analysis indicators, the studies and the tools that are most commonly used and heavily backtested, blending those into a trend model, which we're seeing in that price panel. The color coding just relates to what that weight of the evidence in the back end is telling us about the trend conditions. So by its very nature, trend following is a lagging indicator. But in the lower panel, what we're looking at is a blended composite view of not just momentum, but also volume and volatility. So when we see these range-bound markets, obviously the trend identification is happening towards the top of that channel, and then we're seeing no-go trends as we drop back to the lower end of that channel. So for the U.S. dollar, right now we aren't seeing conclusive evidence of breaking out of that range-bound choppy mess. but certainly a lot of analysts and PMs are keeping an eye on strength in the US dollar as a potential risk aversion. Alex, let's move on to some of the commodities that were popping out in that commodity index. Let's start with a chart of gold. Precious metals not behaving the way that a lot of agricultural, energy, and industrial metals have been behaving.
Yeah, gold's still rating a lot of people. We can see that we've been generally moving higher. These go trends making some ground, giving way to corrections, which is fairly normal. But then we saw this recent go trend really petered out very quickly, and it didn't last long at all. So the oscillator crashed right back below the zero line on heavy volume, and then now we're seeing weak pink no-go buzz. So gold not acting in any way as a flight to safety if people are concerned about the equity markets pulling back a little bit. So that's an interesting dynamic. You've got people worried a little bit about the stock market, but not pulling into gold, at least not as of this moment.
Absolutely. So one of the things that we do here at GoNoGo Charts, obviously we're looking at absolute price action, absolute trends in individual securities, sectors, indices, you name it. We also like to look at a lot of relative strength charts. And so, Alex, if you've got a minute, let's pull up our commodities rel map. And so when we think about asset allocation, a lot of investors heavily biased towards US equities. So just using the S&P 500 as our benchmark, we can take a look at various segments of the commodities complex relative to their performance against the S&P. Again, we're still using that same trend model, all those composite indicators blended in the background. But instead of looking at the price action of each of these securities, we're just looking at the color to let us know on a relative basis what is trending higher than the S&P 500. So if we run down this map from top to bottom, pulling out those that are in a period of outperformance against the S&P 500 index, we can see that Brent crude oil right there in the second panel, at least for the last several weeks, has been in a strong go trend relative to the S&P. We can also see that DBC, which is a commodities index, a blended characteristic of multiple different commodities, outperforming. We also have FCG, which is our nat gas ETF, and certainly within the energy complex, we've seen both natural gas and various oil charts screaming in these breakouts as they catch the bid. If we move down a little bit lower, MOO is an agricultural business ETF, and that's given exposure to a lot of the industrial companies that are helping farming, cattle, you name it. And then if we continue on lower, steel has gone into a weaker go trend relative to the S&P 500, and nat gas, of course, as well as U.S. oil and lumber outperforming. So when we think about our allocation in this short-term pullback here on the S&P 500, still within a go trend, but not capturing a lot of alpha, these might be some areas where we could look to relative outperformance in some commodities plays. Of course, if you're not a futures trader or you prefer investing in equities, the lovely ETF complex can give us some pretty frictionless exposure to a lot of these areas of the market. Alex, why don't we turn our eye back to the S&P 500? Let's talk a little bit on the daily basis what we've seen in terms of this recent pullback.
Yeah, I mean, just as you said, still in a go trend, but certainly giving back a little bit. And we can see, I mean, what I think that's 11 straight acquisitions. Now, this comes after another higher high. This comes after counter trend correction icons, which tell us that in the short term, price may struggle to go higher. This is often in a trend. It doesn't move in a straight line. But is this going to be a too destructive go trend this time around? That's what we're going to find out and want to ask ourselves. And if you look at the oscillator panel, you can see that this is the first time since April where we've seen a significant breakdown of the oscillator to negative territory. You can see we're at -3, so we're well into negative territory, and volume is heavy. You mentioned that we try to incorporate all the pillars of technical analysis into this one chart. Well, the oscillator goes to a dark blue. It's telling us volume is relatively heavy. So this pullback on heavy volume and breaking into negative momentum. So little bit more of a concern than perhaps we had back in June and July when we came highs and found support at the zero lines. We're going to be very curious to see what happens here. Now, on a pure price basis, you can see some support, right? These prior highs giving, so we'll want to see if the oscillator can come back and perhaps get back into positive or not.
So one of the things that that we were taught through the CMT program and working with technicians is that multiple time frame perspectives can be really helpful. If you've heard some of the great CMT charter holders on financial news networks recently talking about short-term pullback versus a structural uptrend, why don't we pull this out to a weekly chart, Alex, just to give some of that perspective in terms of what the longer-term picture looks like.
Yeah, I mean, we look great, right? I mean, if you're somebody that's rebalancing quarterly or looking to hold some positions over a few years, several years, then we're in a go trend. And you're, as Jerry Parker would tell us, you're probably playing golf, right? If you're worried about the daily chart, you can see that we're painting strong blue bars. We have seen a counter trend correction arrow, and we see price pull back a little bit, but we are nowhere concerned on the weekly chart the way we were on the daily chart. Now, having said that, seeing that we had distance at levels that were prior highs, we really would love to take out this ultimate high here from January. So we'll see. But still making higher highs and higher lows on the weekly chart. Oscillator is clearly in positive territory. So if you want to keep it in the context time frame, perhaps on the shorter term, we would be looking for opportunities to enter when the trend re-strengthens, or perhaps even if we go into a no-go trend for a couple of weeks, we'd be looking for that next go trend because the weekly chart says the trend is still in place.
Absolutely. You're highlighting a number of concepts that have been well articulated by the behavioral finance community. As technicians, we talk about support and resistance areas. The behavioral psychologists talk about anchoring principle. And so certainly as we approach those prior highs and reach up to where we had peaked out in the end of 2021, we know that there's overhead supply. And that can create the resistance shelf that can reject us a little bit lower. Of course, the same holds true that once we break through those resistance areas, then we're at all-time highs, and there isn't overhead supply. And that can be very bullish for equities markets, and we'll see how the rest of 2023 plays out. But we know that there's a lot of folks out there that are shorter term in their perspectives, trading around these positions. So let's jump through the daily. Let's get down to an hourly or a 30-minute chart.
Sure. Let's go. We've got so many custom built intraday time periods here, but exactly. You can see on the key point really that you want to make, Tyler, is that whatever your time for your risk horizon, you want a disciplined checklist for making decisions, and you can use any good indicator in the same way on any time frame. Remember, technical analysis is fractal in nature, in that if something provides you with some insight on a weekly chart or a daily chart, you should be able to apply the same process on an intraday chart as well. And you can see that on an intraday frame using an hourly chart, we're in a no-go trend. So putting this all in perspective, let's say you're talking to your larger time frame being a go, the daily is showing some weakness. Well, if you drop down here to the hourly, you certainly wouldn't want to take any positions perhaps just yet. At least wait until this no-go reverses to a go trend on the smaller time frame. If we get a go on the smaller time frame, then it might allow the daily to stay in its trend, and you're now trading in the direction of the larger time frames. So at the moment, no go, but look at this testing of the zero line, really having a difficulty to move away from it back into negative territory. So we'll watch. We'll see what happens here on the shorter frame as well.
And if we're just using our classical technical lens, that gap, the breakaway gap over on the left side of the chart, obviously providing a very clear area of support in these last couple of lows on this hourly chart. And so when we hear the TikTok traders or irresponsible practitioners talking about, you just buy the dip, right? We don't want to make that our practice. As we saw on the weekly time frame, still in a structural go trend for that primary trend. But if we are thinking quantitatively, right, we want to look for that sign where we have established support bottomed here through a little bit of a bottoming process. And then we're looking to the GoNoGo oscillator as our first clue, right? Momentum leads price. And so seeing that break above the zero line, seeing it reach positive momentum, and then reversing that trend here on the shorter time frame, that's going to be our sign to get back in and to maybe even get more aggressive in exposure to the U.S. equity index. So Alex, let's turn our eye to the sector rel map. We know it's a market of stocks, not a stock market. It's not all about just the S&P 500. We can instead look to the sectors of the marketplace to see what is performing again on that relative strength basis. So we're looking at each sector relative to the benchmark S&P 500 using the same GoNoGo methodology on each of those ratios. And you can see that in the top three panels, those growthier equity sectors like information technology, consumer discretionary, and communications have all cycled through those no-go trends. Information technology still in a strong no-go relative to the S&P. That doesn't mean that on an absolute basis, the XLK ETF is not also in an uptrend, but we know on a relative basis, it's underperforming. We've seen that consumer discretionary just in the last 2 days has regained a go trend, and communications soundly performing for the last few days relative to the S&P. But where my eye is drawn, Alex, are to those cyclical sectors of the economy: energy, financials, industrials, and materials, all outperforming the S&P. And when we were looking at that commodities rel map, the commodities space relative to equities, that's telling us that that the energy complex, some of those industrial metals and materials for home building and lots of other industries are performing well. So let's take our next step, Alex, and let's dive into the industry subgroups of the materials sector, the XLB. And for everybody who's watching this, what we're doing is this top-down process where we start with the asset classes, we look at the equity markets as a whole, and then the sector groups. When we find those relative outperformers in the sector group, then we can dive even one step lower and look at the industry subgroup within that are outperforming the sector. I did notice, Alex, just now, obviously we're recording this midday on Thursday, August 10th. What was a no-go in the steel ETF or steel index up at the top just went from a no-go back into its go trend relative to the materials sector. So why don't you talk us through this a little bit, Alex, in terms of areas of outperformance?
Yeah, I mean, I think the clear, it's a pretty extreme map in that we've got the top and the bottom performing really well. And you can see that updating real time here with the steel index in the top. So it'll be interesting to see where that closes, especially as the weekends. But the other area of materials that is performing really, really well is this lower panel, and that's non-ferrous metals. And so you can, within, people say fish where the fish are, or fish where the fishermen are, but you can really sort of dive into an outperforming sector and find the subgroups that can generate the most alpha as well. And so that's what you're trying to do when you do this kind of relative strength analysis. And it looks to me like this low panel is really is looking good.
And so using stock chart sector summary, you can dive into the sectors, and that'll bring up all the industry subgroups. And then you can dive into the industry subgroups for individual names. So thinking about our GoNoGo chart, why don't we pull up, again, I had to look it up. Non-ferrous metals are those that do not include iron ferrite, steel, iron ore, but think about aluminum and copper and zinc and platinum and palladium and lots of other metals. And so we can pull up a chart of CCJ, which is Cameco Corporation, trading on the New York Stock Exchange. Here's an outperformer within that industry subgroup that's outperforming the sector that has a strong relative performance to the index. So getting all the way down to the individual names, we can see that we can capture some of the outperformance from those sectors and industry groups. So Alex, talk to us a little bit about what you're seeing right here in terms of the trend and momentum.
Yeah. And what this one is, when we looked at that map, we saw that non-ferrous metals had been performing for the majority of that chart, so for a couple of months, and that's true too of this security at the level for Cameco Corp. And you could have had opportunities to end performance because of using the trend continuation icons, using the support of the zero line for the oscillator. So this was when that outperformance started to happen, but you've had opportunities to get into the trade. And the reason I point that out is because we're seeing another one more recently on the chart. Of course, trends don't always continue forever, but oftentimes we're too quick to say, well, we've missed that move. So this could be the middle of a trend, a strong trend. It could be the beginning of a trend. So as long as we're getting those trend continuation icons, as long as the oscillator is generally finding support at the zero level, that's a good thing. And so we like to look at this one because we're close to the most recent high, and we're at the moment still finding support on the oscillator at the zero level. So perhaps momentum, if it stays in the direction of the trend, we might look for price to make another higher high here.
Absolutely. Now, for those of you who have been paying attention, we do this weekly show. We talk about current markets, but the last 3 Mondays, we've released the first 3 segments of a 6-part educational series on the concepts behind GoNoGo charts and technical analysis broadly. So on Monday morning, you'll get a new episode of that educational series talking all about trend re-entry or trend continuation icons that you'll find on your GoNoGo charts. And that concept of perhaps prematurely calling a trend over or already run. Just talk to anybody about the Apple shares that they bought 20 years ago or 10 years ago or 5 years ago or 2 years ago or 6 months ago. So Alex, from all of us here at GoNoGo Charts, really appreciate everybody tuning in here on Stock Charts TV. We're going to be back with you every Thursday afternoon for a little market update. And make sure you check out those educational series that are dropping Monday mornings here on the Stock Charts YouTube channel. Until next time, be good to each other and trade well.